The world's economies have been in crisis for some time now as a result of the pandemic and the ongoing war between Russia and Ukraine. America's stock exchange is no different. The market is reeling, and a drop in the Dow Jones has resulted in the wealthy losing billions. On top of that, because of the interconnectivity of economies, the Australian stock exchange is also suffering. We'll be covering that and more in today's video. Firstly, inflation in America. Much of the world's economies are measured against the value of the American dollar. That value is tied not only to measurable factors, but also to speculation. That point will be important soon. Because of the current state of the world, following the catastrophic effects of the pandemic and experiencing the consequences of a war between Ukraine and Russia, the world's economies have been thrown into disarray. Much of the world's energy and grain supplies come from Russia and Ukraine, and that says nothing about their contribution of materials required for use in digital devices. The war has interrupted supplies, and it's increased the input cost of a variety of goods in a multitude of countries. America has been considerably impacted because of its reliance on Russia for fossil fuels as well as other resources. Since fossil fuels are required to generate electricity that powers production machinery, almost every major industry in the country has been impacted. That resulted in an increasing annual consumer price inflation, or CPI, rate. Annual CPI did slow down in August from July by about 0.2% as reported by the Labor Department. However, in a monthly comparison, the CPI was actually shown to have risen by 0.1% after holding flat in July. This news came at a point when people widely expected that inflation would fall in that month, so speculators were understandably shaken. That uncertainty has now led to another major hit to the economy. Next, the Dow falls, and billions lost. Once the news regarding the CPI went public, the economy immediately reacted. The stock market sank even further than it already has. The Dow Jones Industrial Average, which is an index of the 30 largest blue chip stocks in the market, sank by nearly 1,300 points as a result of a rout in the New York Stock Exchange being triggered by the news. Tech stocks were particularly damaged, dropping by more than 4.4%. As a result of this development, some of America's wealthiest individuals have lost billions of dollars. Jeff Bezos, head of Amazon, has had his wealth decline by almost $10 billion, while Elon Musk of Tesla has lost about $8.4 billion. Others that have lost more than $4 billion include Mark Zuckerberg of Meta, Sergey Brin, and Steve Ballmer. Apart from the effect it's had on the rich, the drop has also caused grief for those that have invested in cryptocurrencies. The price of Bitcoin in particular took a fairly large hit, dropping by around 7.3% to sit at about $20,000. Over the past 6 months, the crypto market has seen an overall decline of about 41%. So this one incident accounts for a large part of its devaluation. Ethereum has also suffered quite a bit, dropping by 4% to land at around $2,400. The Dow falling isn't just a problem for those that have a stake in top stocks. The average individual might soon be experiencing the consequences of the drop. Moving on, POTUS and the market's responses. The President of the United States, Joe Biden, responded to the news of the report. Though he acknowledged that it will take considerable effort and time to tame inflation, he took a much more positive approach to the news. Biden's stance was that the data showed that the government was making progress in fighting inflation, saying that prices were virtually flat, with gas prices being down and wages have gone up. However, considering how the markets are reacting despite expectations, it's become increasingly likely that the Federal Reserve will hike interest rates aggressively in response. Chris Zaccarelli, the chief investment officer at Independent Advisor Alliance, told the New York Post that the key to understanding and defeating the inflation problem is the labor market. According to him, if unemployment is low and customers are comfortable in their spending, it's unlikely that the inflation issue will will resolve itself. He added that the problem for the Federal Reserve is a political one, not an economic one. In order to curtail the crisis, the Fed would have to make unpopular decisions that are politically infeasible. For Zaccarelli, the best way for the Fed to solve the problem would be to deliberately create a scenario where unemployment rises significantly. That will make them unpopular with the current administration, even more so than when the previous administration was in power. For the Fed to make long-term positive changes, they have to risk criticism in the political sphere. Finally, the world reacts. The ASX crumbles. Following the unfortunate news from Wall Street, markets around the world have followed suit and taken a dive. One notable instance is the Australian Stock Exchange, or ASX, which fell by 2.9%. That amounts to about 68 billion Australian dollars in market capitalization that was lost. Notable stocks that decreased in value were CBA, which dropped by 2.9% in early trading, NAB, which dropped by 2.6%, and Westpac, which fell by 2.3%. In the sell-off that ensued, tech stocks were also greatly impacted and dragged down. A major reason for the impact American inflation has had on the Australian market is the resultant effect on the cost of living. The annual CPI in Australia, as a consequence of rising inflation around the world and particularly in the US, jumped 6.1% over this past year. In a bid to stabilize inflation, the cash rate has increased to about 2.4%. A similar response to the issue of rising CPI might be incoming in the States. Jal Murray, a market analyst from Monex, has said that market expectations regarding the Fed's next rate hike had hardened after this recent news. While they were at first expecting a half percentage point hike, some are now expecting a 1-point hike, with 0.75 being the floor. One thing is clear: the Fed has a tough battle ahead of it if it's going to bring down inflation to a manageable level. Other news. Firstly, O'Leary sees market plunge as opportunity. If you've watched Shark Tank, you'll likely know who Kevin O'Leary is. He's better known by his nickname, Mr. Wonderful, and apart from being a host on that show, he's also the billionaire head of the investment company known as O'Leary Ventures. Now he's taken to the media to advise individuals to invest in Chinese stocks. O'Leary has said that not having any allocations in the world's fastest growing economy is crazy. He added that in around 20 to 25 years, China will have the world's largest economy for sure, and there's no denying that. If investors are looking for long-term secular growth, the Chinese market is the best option. According to O'Leary, concerns over the political troubles between the two countries should not factor into the decision to invest in the economy. Since the two economies are so closely tied to each other, it doesn't make sense to not have a stake in both on that basis, especially since the turmoil could be temporary. Towards the end of his discussion on the matter, he likened the boom of Chinese e-commerce to the earlier emergence of online consumer options in the US, which could therefore offer similar profits to investors. Next, bargain hunters take Wall Street. After the massive sell-off following the release of inflation data, some traders took advantage of the situation and went bottom fishing. The sell-off resulted in many stocks devaluing, and the hope is that they might be able to pick up those that could make a quick rebound in the following months. However, as expectations of a major Federal Reserve rate hike mount, the possibility of a quick market rebound seems more and more unlikely. Some examples of these upside bets included the SPDR S&P 500 ETF Trust, of which 6 out of the top 20 most actively traded contracts on the day of the news were call options. These ranged from calls betting on SPY shares rebounding to between $380 to $405 by the end of the next day's session. That trend continued at the end of that day as well. Lastly, McDonald's beating market gains. In the latest trading session, McDonald's stocks closed at around $255.7. That was more than half a percentage point increase from the prior day. That increase beats the daily gain of S&P 500 500's 0.34. However, the world's biggest hamburger chain is still suffering from long-term decline, as it sees a 4.49% loss in value in the past month. That's still better than the retail wholesale sector's loss of 6.76%, and more so than the S&P 500's loss of 7.95. The Zacks consensus estimate projects total revenue for the company to reach about $22.8 billion by the end of the year. That represents almost a 2% decrease from the prior year's revenue. That's a wrap for this video. Do you think the market will make a quick rebound? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.